If you are getting ready to buy your first home, or maybe it's been a little while since you purchased a home, this video is going to be for you. I am talking about the 5 must-know tips that will help you purchase your home with the best terms and for the best price. So stay tuned. Welcome back, everyone. My name is Olga St. Pierre, and I am a Keller Williams real estate agent right here in Philly in suburbs and right across the river in the beautiful of New Jersey. Please make sure that you subscribe to this channel and hit the notification bell to make sure that you don't miss any of our helpful videos that come out every week. So let's jump right in. We are talking about the best tips today about buying your home. Here we go. All right, here's your tip number 1. How much money do you think you need in order to buy a home? Okay, a lot of people have a misconception and think that they only need the down payment money. Well, here's an important correction for you. You're going to need 2 pools of money. One is your down payment money, and the second pool is your closing cost. It does cost money in addition to the down payment to buy your home. And on average, in our area, it's about 7 to 8% of your purchase price. So your agent is going to sit down with you and break all your closing costs down for the home or for the area and for the strategic sale price that you are thinking about buying. So it's very important to understand that when you're saving up to purchase your first home, you need to understand that you're going to need down payment as well as closing costs. Tip number 2. It's important for you guys to understand that it's not the interest rates, but actually your home's property taxes that are going to make the largest difference in your monthly payment. Right? Your monthly payment is your principal, interest, taxes in your homeowner's insurance. So just to give you an example, if you are looking at a couple of different school districts and one home that you're looking at has property taxes of $8,000 a year, right? Your monthly payment on that is going to be $670, okay? If you're looking at another home, maybe in a different school district that is still part of your consideration, your monthly payment is going to be $420 on property taxes of $5,000 for the year, right? So when you take the difference and you look at it, it's $250 a month difference. So for someone, that can actually make it or break it for them to be able to afford buying a home in a certain school district. So I encourage you to keep an eye on property taxes when you are shopping, because that is going to be one of the most important considerations that will affect your monthly payment. Tip number 3, monthly target mortgage payment versus what you are going to be pre-approved for. So here's the difference. You may come to me and say, hey, Olga, I am pre-approved for up to $500,000. And what I'm going to ask you in return is, hey, tell me what you are comfortable paying per month, right? So if you're renting right now, think about how much you're currently paying in your rent and tell me, is this the amount that you're comfortably paying? Can you go a little bit higher, right? What is your highest monthly amount that you're most comfortable with? That is the number that I want you to think about. And here's why. I want you to be comfortable when you buy your home. Okay? I want you to have money left over after you pay your mortgage to have fun, to go on vacations, to go to movies and, have fun with your kids. I don't want you to be upset and stressed out because every penny that you earn is going to go towards your mortgage payment. Okay? So to me, the most important factor is what you're comfortable paying per month. And then what we do is we take that amount and we reverse engineer it and we work backwards, as I call it, and we figure out what that sale price is going to be based on your monthly amount, right? So let's say you're comfortable paying $2,500 a month. Depending on the area that you're looking to buy your home, that may mean that your target purchase price may be $350 to $400. Right? And that is what we're going to focus on. Unless we can't find something, we may have to tweak some pricing, but that is the conversation that we have, and that if we need to make adjustments. So again, focus on your most comfortable monthly payment and not what you pre-approved for, because it's going to make your living so much more better and so much more comfortable. Tip number 4, know what your financial health is and pull your own credit report. Okay, here's why. I want you to go to a website. It's called annualcreditreport.com, and I'm going to post this information and any other resources in the box below. And what I want you to do is assess your financial health. A lot of the times when I'm meeting with buyers in the beginning to start having the conversation on what's on their mind, what are they looking for, what is the budget, they think that everything is great and they're able to afford the best price and the best terms. Okay, and then what happens is when the lender that we start working with goes in and pulls their credit, there's issues on there. So my recommendation to you is if you are starting to think about purchasing a home, but maybe you're thinking it's not going to happen until springtime, until 6 months from now, go ahead and figure out and check your financial health right now. Because if you find something on your credit report that needs work, it may take you 3 to 4 to 5 months to fix it. Right? Because once they fix it in their system, it has to be updated in all of the 3 credit bureaus, and it takes more than 30 days for them to update their system, and sometimes it takes more than that. It may take 60 to 90 days. So if you were hoping to buy a house now, and then you realize that there's issues on your credit that are going to prevent you from getting the best price, the best terms, and the best interest, and it's not going to happen, okay? So what we look for is to make sure that there are no judgments, there's no late fees, there's no any kind of derogatory items that are going to be on your credit report. So that's what you want to look for, because if you want to get the best terms and the best interest rate and the best program to help you buy your home, basically on the best terms, your financial health has to be in great shape, okay? So if you want more information on that and how to do that, let me know. And tip number 5, the myth of having to have 20% down in order for you to buy your home. That is simply not true. Okay, nowadays, depending on your credit, depending on your financial health that I already mentioned in the previous tip, you can actually buy your home with zero money down. There is at least 2 programs that I know that you can buy your home with no money down. You can buy your home with as little as 3% or 3.5% down. Okay, it's just a matter of sitting down with your agent and figuring out what is it that you're trying to accomplish, what does that look like, what kind of game plan we can put together, and then speaking with your lender to see what are the best programs that are available for you. What I can tell you is that if you want to put as little money down, right, or be able to buy your home with no money down, your financial health has to be in great shape. Okay, and that's what we talked about at tip number 4. So if you want more information about the no money down programs or as little as 3 or 3.5% money down programs, reach out to me and I'll be more than happy to go over that with you. So I hope you enjoyed this list. All right, that's a wrap for our list. I hope that you found this list helpful and this video as well. Please let us know in the comments below what else you would like to know about purchasing a home or selling a home or living in our beautiful community here. Until next time, until next video.